Hi, today is the 27th of November and I'm going to be making a video for the weekly prediction on the week of the 2nd December this 2022. So, before we get into the prediction, we have to go to the OHLC of last week. Last week, the SPX opened at 3956.23, the high was 4034.02, the low was 3933.34, and the close was 4026.11. As I mentioned in my earlier video today, this meant that my first prediction was right and I am 1 for 1 as of this week. The change was 69.88 points and the range of the bar was 100.68. And as a percent of the open, it's 2.54%. The volume was very little considering the fact that last week the volume was close to 13 billion. However, this week it is 6.64 billion. Which is going to be a very important part in my prediction later on. The spot price as of now is 4,026.11 and the December future is 4032.50 and the basis is 6.39. So, let's talk about the candlestick patterns. On the weekly chart, there aren't any extremely prominent candlestick patterns as you can see. However, if we switch over to the daily chart, the most recent candle is a gravestone. A minor one, but still a gravestone, which is a bearish pattern that suggests a reversal followed by downtrend. So this is something that's important. It is an early indicator as to a possible, even a minor reversal downwards. As for the price action, there is a rising wedge, which I discussed in the video from last week, and there is a very long and ongoing descending triangle, which I have drawn with the trend line here. As you can see, the gravestone hasn't closed above it, so it's still under the trend line, but it is very finely touching. So this week is going to be extremely important because this is where it make or breaks the descending triangle. And I'm going to be explaining what I think is going to happen. So, for the weekly and daily, there is a rising wedge in the price action. And as I just mentioned, for the trend, there are higher highs and higher lows. If you go here, you can see because of this upper bar of the rising wedge, there are higher highs, and similarly for the lower bar, there are lower lows, showing that the market was in an upward rally. As for the trend line, as aforementioned, there's a falling trend line as a descending triangle. There's only going to be a clear trend indicator if it breaks the falling trend line. Touching the trend line now, the market is currently, as I mentioned, at the trend line. And there's a high probability of an upward breakout once it closes above the trend line. So, as of the daily, the same thing. There's just higher highs and higher lows, and it's just touching this trend line. For the ADX values, the DMI plus is 32.6519, DMI minus is 17.3606, the ADX is 20.9392, the RSI for the weekly is 52.39, and the daily RSI is 62.05. The SMA weekly is for 20 weeks is 3922.09, 50 weeks is 4145.48, the 200 week SMA is 3639.51. The daily SMAs for 8 days, it is 3983.66, for 13 days it's 3950.19, for 21 days it's 3987.42, for 50 days it's 3792.61, for 200 days it's 4056.91. As you can see, the price is currently above most of the SMAs. However, there are more indicators that I will cover later on in the video explaining why my view currently is a bit bearish. For Bollinger Bands, the weekly band showed that the upper band is 4320.13, the middle is 3922.09, and the lower band is 3524.05. For the daily Bollinger Band, the upper bar is 4095.34, the middle band is 3901.93, and the lower band is 3708.52. Now, let's talk about the pivot points. For monthly, the R3 is 4591.17, the R2 is 4255.30, the R1 is 4140.70, the pivot point is 3919.43, support 1 is 3804.83, support 2 is 3583.56, support 3 is 3247.69. For the weekly pivot points, R3, R2, R1, PP, S1, S2, S3, are 4199.18, 4098, 4062, 3997, 3961, 3897, and 3796, respectively. Finally, for the daily pivot points, R3, R2, R1, PP, S1, S2, and S3 are 4053, 4040, 4033, 4026, 4019, 4013, and 4000 respectively. Now, the immediate resistance is 4028.39. As I mentioned, the market action is currently extremely close to the falling trend line, and the immediate support is 3901.46. The next support is 3720.01, and the next resistance is 4110.17. Now, for the monthly expiries, the highest CE is 4,000, the highest PE is also 4,000. The premium for the 4,000 CE is 96.51. The premium for the 4,000 PE is 62.00. And the put to call ratio is 1.44. It is slightly on the higher end, but not extremely outrageous. For the weekly expiry, the highest CE is 4,000. The highest PE is 3,900. In terms of open interest, I want to clarify these are all based on open interest. The premium for 4,000 CE is 55.90. Premium for 3,900 PE is 7.72. And the put to call ratio is 3.64, which is an extremely high value, meaning that there's a lot of put writers and there's a lot of bullish sentiment at the moment. The daily expire date. Highest CE is 4,000. The highest PE is 3,800. And the premium for 4,000 CE is 37.49. And the premium for 3,800 PE is 0.25, and the put to call ratio is 2.31. Now, let's get into the prediction. Although there are a lot of signs saying that there's a bearish trend, and I have a high possibility that there is going to be an upside to the market, and here is why. First of all, the put to call ratios are above 1 for the daily, monthly, and weekly expiry dates, showing that there are significantly more put writers, indicating that there is bullish sentiment. Now, one thing to keep in mind here is that the RSI levels were also very high, and considering if the market does go up because of the high put writing calls, there's also going to be a probability that it might have a reversal when those positions are closed. That is one thing to keep in mind. And because it's a descending triangle, it's advisable to wait. So I've highlighted possible upside, but really the best course of action is to wait for confirmation. Because right now, because it's a gravestone doji, first of all, it's an immediate bear signal. However, there are contradicting signals in between the option chain. So the best course of action over this week right now would be to wait for the next few candles, because as of now, I don't have a clear view as to where the market is going to go. But if the next 1 or 2 candles close higher than each other actually, then it is a good bullish signal. Because first of all, it has broken a very long descending triangle. And if it's backed by volume, even better. So that is one way you could take a trade. However, if the market does reverse back downward, it is best to wait for at least 2 days of candles. Because once you have the confirmation that it's going downwards, that's a good time to take a position. Because since it's a descending triangle, it hits the top and comes back down to the support line. That is one thing to also keep in mind. So, as of now, my weekly prediction is that there is no clear indication as to where it's going to go. And I will make another video in the next day or a maximum of 2 days based on the market movement, giving my final prediction. Because there is really no clear indication as to where the market is going to go, because there are contradicting signals between the candlestick and the option chain. So, as of now, my view is neutral. But in the event that the market shows clear signals, I will be making a video and explaining why my view has changed and what exactly are the levels to look out for. But as of now, this is my weekly prediction that there is a neutral view, and the best way to go about trading this week is to wait for confirmation for the next candle or the next 2 candles to be sure. But that's my video, and I'll catch you in the next week. Along with watch out for the video for when I will be giving a clear signal as to where I think the market's going to be going. But that is my video for today, and I'll catch you in the next one.